Japan's energy bill relief, a 980 billion yen investment. Introduction. Japan is facing significant challenges in managing its energy costs, and the government has responded by allocating an additional 980 billion yen, approximately $7.2 billion, to curb energy bills. This significant investment is part of a broader effort to mitigate the impact of rising energy prices on households and businesses. Key points of the energy bill relief plan. Direct subsidies. A portion of the funds will be used to provide direct subsidies to households and businesses, helping to offset the cost of electricity and gas bills. Energy efficiency measures. The government will also invest in energy efficiency programs, aimed at reducing energy consumption and lowering overall costs. This may include initiatives such as promoting the use of energy-efficient appliances, improving building insulation, and investing in renewable energy sources. Support for vulnerable populations. The plan will prioritize assistance to vulnerable populations, such as low-income households, the elderly, and those with disabilities. These groups are particularly susceptible to the financial burdens of rising energy costs. Background and context. Japan's decision to allocate additional funds for energy bill relief comes in the wake of several factors. Global energy crisis. The global energy landscape has been volatile in recent years, with factors such as geopolitical tensions, supply chain disruptions, and increased demand contributing to rising prices. Domestic challenges. Japan faces unique challenges in its energy sector, including a reliance on imported fossil fuels and the need to transition to cleaner energy sources. Economic impact. High energy costs can have a significant negative impact on the economy, as businesses may face increased operating costs and consumers may reduce spending. Potential impact of the investment. The 980 billion yen investment is expected to provide some relief to Japanese households and businesses struggling with rising energy bills. However, the long-term sustainability of energy costs will depend on a number of factors, including global energy markets, domestic energy policies, and the successful implementation of energy efficiency measures. Conclusion. Japan's decision to allocate significant funds to curb energy bills is a testament to the government's commitment to protecting its citizens from the financial hardships associated with rising energy costs. By combining direct subsidies, energy efficiency initiatives, and targeted support for vulnerable populations, the government aims to mitigate the impact of the energy crisis and ensure a more sustainable energy future. Many other economies have implemented similar initiatives to address rising energy costs. While the specific approaches and the scale of investments may vary, the overall goal is to alleviate the financial burden on households and businesses. Here are a few examples. European Union. The EU has implemented various measures to support member states in managing energy costs, including price caps, subsidies, and energy efficiency programs. United States. The US has provided financial assistance to households and businesses affected by high energy prices, as well as invested in energy infrastructure and renewable energy projects. China. China has implemented a range of measures to address energy shortages and rising prices, including increasing coal production, promoting energy efficiency, and investing in renewable energy. India. India has taken steps to reduce its reliance on imported fossil fuels and increase domestic energy production, while also implementing measures to improve energy efficiency and promote renewable energy. These are just a few examples, and the specific initiatives implemented by each country can vary significantly. Factors contributing to global economic quandaries. The global economy is currently facing a complex interplay of challenges that have contributed to a state of uncertainty and economic quandary. Here are some key factors. 1. Geopolitical tensions. Trade wars. The ongoing trade tensions between major economic powers, such as the US and China, have disrupted global supply chains, increased tariffs, and created uncertainty for businesses. Regional conflicts. Conflicts in various regions of the world, including the Middle East and Eastern Europe, can lead to instability, disrupt trade, and drive up energy prices. 2. Supply chain disruptions. Pandemics. The COVID-19 pandemic highlighted the vulnerability of global supply chains to disruptions, leading to shortages of essential goods, increased costs, and economic slowdown. Natural disasters. Natural disasters, such as earthquakes, floods, and hurricanes, can disrupt production, transportation, and infrastructure, causing economic losses and supply chain disruptions. 3. Inflationary pressures. Rising prices. Many economies are grappling with rising inflation rates, driven by factors such as increased demand, supply chain disruptions, and monetary policies. Interest rate hikes. Central banks may raise interest rates to combat inflation, which can slow economic growth and increase borrowing costs for businesses and consumers. 4. Energy crisis. Supply shortages. The global energy crisis, exacerbated by geopolitical tensions and supply chain disruptions, has led to higher energy prices and increased economic uncertainty. Transition to renewable energy. The transition to renewable energy sources can also present challenges, such as the need for significant investments and the potential for grid instability. 5. Technological disruption. Automation and job displacement. The rapid pace of technological advancement can lead to automation and job displacement, creating economic uncertainty and social challenges. Data privacy and cybersecurity concerns. The increasing reliance on technology also raises concerns about data privacy, cybersecurity threats, and the potential for economic disruptions. These factors are interconnected and can amplify each other, creating a complex economic environment that is difficult to navigate. As a result, many economies are facing significant challenges and uncertainties, requiring policymakers to adopt innovative and adaptive approaches to address these issues.